Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone is doing well this morning. A number of hot zones have come out this morning, so we have some pre-market data that the markets are going to have to deal with, along with the aftermath of Powell, which we will absolutely get to. So retail sales out this morning, unemployment claims or initial claims out this morning, and ECB, as if that isn't enough. So back-to-back major central bank events. This equity markets, treasury, currencies are digesting. We take a look at, what does that timing mean to us? When we take a look at any hot zone on the calendar, remember, the most valuable part about it isn't necessarily what the data is, right? What we expected versus what we actually got. Most important thing about an economic calendar is the time. It's the fourth factor of the market: price, volume, volatility, time. And time means at 8:30, what was then the end result on the price chart? S&P up very well. And again, remember, from 8:30 forward, this is the retail sales, initial claims, and the ECB press conference. So you'll see from 8:30 on, NASDAQ up. The one index that's in an uptrend this morning continues to be the Russell. Russell woke up in a good mood and continues to be in a really good mood. And this is going to be an interesting juxtaposition as we go into the end of the year, because the Russell's number one weighted sector is KRE. KRE is still negative on the year. And one of the things that we've been transitioning from in November to December is two things. Number one, have a list of names that are susceptible to tax loss harvesting, have a list of names that are likely to benefit from window dressing. But the bigger picture, more so than year-end tendencies, are the implications of a Federal Reserve going far, far, far more dovish than we even expected in November. May rate cuts were pretty much expected. Now we're moving that pretty handily into March. So not only are we not going to have higher for longer, we're getting rate cuts. Now, if you've been watching Charts and Coffee, if you're in the Sector Secrets Mastery Room, none of this macroeconomic information, this is what this is, a rate of change understanding using inflation, jobs, and even growth to understand what the Federal Reserve is going to say and do. That's macro, gang. That's it, right? Everything else is just nonsense. So this notion that we could get hikes, I can't believe Powell actually put that out there, but let's face it, we knew that was a liar, liar, pants on fire moment, and the market pretty much shook that off. Macroeconomically, we have been heading towards rate cuts. It's not a matter of if, it's only a matter of when. And when the when moves in closer, we get more of the movement higher. I'm actually kind of laughably surprised at how many traders are still thinking about hikes. I know no one at Simpler is one of them. So we have a situation where the buy everything market, and a lot of you know that I've been saying, look, I'm stoked for 2024. 2023 was not easy. It was a tougher year relative to, say, 2020 or 2021. It was a little tougher than 2022, but 2024 is going to feel a whole lot more like the early part of 2021. The reason being, and I'm not prognosticating, I'm not looking into the future. Anytime anyone mentions recession, hit the mute button. It doesn't matter. Anytime you hear recession, it's clickbait. And I'm going to be I'm not going to mince words about this. It's clickbait, because nobody cares. We've already seen the data that would have mapped to the official, if there is even a definition of recession. So move that aside. Then we move on to earnings. Earnings could have some volatility implications for sure, obviously. But if companies understand the same thing you and I do, which is we have rate cuts coming, think about the behavior around corporate decisions that will be made when money is cheaper to not only borrow, but obviously spend. So that's really it, gang. Whether it was window dressing, nothing about what Powell is saying has been against what Fed Fund futures are doing. So please remember, gang, a dovish Powell is not a surprise at all. The degree to which March is now, the only thing that I was hoping for, to be quite frank, was that traders and investors got a little ahead of themselves on March, that Powell did not want the overall market expectation to be that they could cut in March. I was really hoping for that. Not that they're not going to cut, but that they would cut a little later. Because if his words were designed to push March expectations to May, we would have had a beautiful chef's kiss of a pullback. And we didn't get that. Instead, March expectations only increased. And we can measure this, right? Here's your March expectations for the quarter point cut. This is about 20% higher than it was yesterday. You want to know where the rally came from? This is where it came from. Now, if Powell and company think, whoopsie, that was not the end result that we wanted to message, watch March, the 20th of March meeting. This is the Fed Fund Futures CME FedWatch tool. Easiest way to decode macro. In fact, I'm even going to go out on a limb and say it's pretty much the only way we need to decode macroeconomic data. Because everything we know about jobs, growth, inflation will end up here. All right. And that's why we did what we did. It's not shocking that the Federal Reserve is expecting cuts. It's actually a little disappointing that they weren't wanting to push expectations out to May a little bit more. But that's why we're ripping higher, gang. That's why. So I know a lot of folks are wondering, hey, what is the deal? It's follow through from something we've been talking about every single morning here at Charts and Coffee, and we want to get long. Now, you might say, okay, Rog, what's the challenge? I know it's not that easy. The challenge is getting the darn pullback. So you might say, Rog, if you're confident about the long side, why not just get long? I need a pullback. Because remember, gang, trading isn't just about the target. Trading is not just about the direction. Trading is also, how do I manage risk from the point at which I've entered? And a lot of times trading gets reduced to, well, S&P is going to 4,900 or whatever the number is. Great. But what's the path there? So remember, trading is not a target. Trading is the journey to the target. And I will tell you, the journey's been a little challenging. On hindsight, this looks, obviously simple, right? Oh, just get long. But that's 2020 hindsight, right, gang? We need a little bit of a pullback and then we'll go from there. And look, we'll get volatility. Nothing goes straight up and nothing goes straight down. But please don't be one of those traders trying to pick a top here. Day trade it. But when you're looking at overnight positions, the path of least resistance, gang, is going to be up. Don't get bearish under the guise of, well, it's gone too far. I'm sure a lot of folks thought that yesterday, and today they're getting their faces ripped off. That's the technical term. So remember, again, let's not step out in front of an uptrend. All right, PSA, my public service announcement, out of the way. Let's get to the questions. As always, the best part of our show. Christian asks, I know we're green. Yes, uptrend. What is GG? GG actually is bullish momentum, bullish trend. It's a green momentum. It's a green trend. For those of you wondering, what the heck is GG, Raghee? So we're green on momentum, green on trend on the indices, on the daily and the 1 hour. Everything looks so overbought. Christian, let's use the right terminology for the environment. One of the biggest mistakes that traders can make in the context of a trend, in an uptrend, is use the terminology overbought and use the terminology in a downtrend that's oversold. Remember, trends are inherently imbalances, right? An imbalance of what? It's an imbalance of buying versus selling. Lots of buying, not as many folks willing to sell, right? What does that create? That creates more demand, right? So whether you look at buyers as support, whether you look at buyers as demand, whether you look at sellers as resistance, whether you look at sellers as supply, remember, it's always an imbalance within the context of a trend. So this notion that something's gone too far or something's overbought within the context of a trend, my friend, I know it's verbiage that gets used a lot. And what I'm trying to do here, look, I don't care what the rest of the world does. I care about those of you that are willing to put the time in to get better at this. That's just really just nonsensical languaging around trends, right? It just sounds good. Oh, this is overbought. All trends appear overbought. That's why we don't use oscillators like a slow stochastic in a trending market, because that's the nature of a trend. More buying than selling, more demand than supply, and increasing support or floor moving higher while the ceiling moves higher, right? So that's why. Now, the only folks who care about overbought are the folks buying at new highs, something we will never do, right? Absolutely, we want to pull back. I'm not going to sell anything. I don't hate my money. And basically, if we are going to find opportunities more near term, I agree with you. I would want to day trade. That's exactly what we want to do. So shorten it. So when you ask how to day trade here, shorten the time frame, right? That's the easiest thing. If you want a more of a short-term approach to what's happening in this environment, more nimble, in case we do get a little bit more of a pronounced mean reversion or retracement, shorten the time frame. Maybe that's more short-term swings on a 1 hour or 5-minute day trading. Is Powell tired of being a Grinch? I don't think he thought he was the Grinch. I don't think I thought he was the Grinch. They've been pretty dovish. They've been pretty darn dovish. So as far as that helping treasury yields go lower, dollar go lower, and euro go potentially higher, and the indices go higher, all those things have been in pretty good alignment. What's been lacking is I think volatility has been a little higher than normal. We can measure that. So it's not that I see. Volatility has been a little higher than the 68% probability of what we typically see. And not many pullbacks. Yeah. But what about AFRM on a 1 hour time frame? I don't have any skin in the game in AFRM. It's not something that ends up on my radar all that often, Munair, but I would look for a pullback on that, maybe around 43 before I buy. Overall uptrend, so pullback buys, which is buy the dip, right? When people talk about buy the dip, what is that? Buy the dip needs one really important thing. It needs a trend. So the question then is, how are all of us right now, how are you right now identifying what a trend is? Waiting for moving average crosses? I'll tell you what, after 30 years, I will tell you, if you're waiting for a 20, 100, 20, 50, 100, 200 to cross, it's going to be way too late, right? So I think that's, while classic and common, it's not as sensitive as, say, shorter term exponential moving averages can be. All right, how are we making that assessment in a more binary way? How do we know that today is the day that we have a trend as opposed to something more subjective, right? So case in point, let's go to that Russell I mentioned that was in an uptrend. Russell's been in an uptrend specifically since 5:45 this morning. That's the specificity with which we need to be able to say that's the day, or even the 5-minute candle of the trend. So we need real-time assessments of these things. So remember, gang, it's not enough to say a week later, a month later, see, that was where the trend was. How are we determining that there's a trend right now, right? So Russell's in an uptrend on the 5-minute. Russell's on an uptrend on the 1 hour. When did it turn into a trend? It actually turned into a trend shortly after the close, right? So Russell, after the cash close, I should say. So there's the Russell trend. And then on the daily time frame, when did the Russell turn into an uptrend? On the 11th of December. So when I'm talking about the specificity of when in real time we can say, this is a trend, this is a broken trend, this is a new trend, that's where we need to be able to look at our charts and say right now, this is what this is, not looking back. So these are all trends. And if you've been listening to this show for a while, you know that we've been bullish in the NAS for quite some time. 2 ways to get bullish is price above the 200. Look, gang, the NASDAQ's been above the 200 most of the year. And the path of least resistance for the NASDAQ's been up. Really easy, simple way to understand what the path of least resistance is. Just find that 200. I prefer the exponential on whatever time frame you're looking at. And then as of the 20th, NAS is in an uptrend. Should it surprise anybody that buy the dip is working? No. But when we go into chop, it's not going to work as well. That's where overbought, oversold starts looking good. All right. So remember, it's not that I don't like a slow stochastic. I love a slow stochastic. We use one in the Sector Secrets Mastery Room all the time. But the challenge is, much like a golfer, do I just keep hacking away at the ball with my favorite club? No, tried that once. I was really curious. Tried that once. Doesn't work so well. The lie of the ball, the distance of the pin dictates the shot. Same thing with trading. I look at the market structure, I look at the volatility, I say, okay, this is the setup that will work. I think a lot of times we want to settle on our favorite setup or our favorite secret squiggle or whatever our favorite thing is and just throw that at everything, right? And we know that's not the way trading works. So the more that we can be nimble with the collection of tools we have and the collections of strategies we have, right? When I can look at that collection and say, this is what's going to apply best here. And that's where you pull buy the dip out of the toolbox and say, all right, trending market, buy the dip. And then all of us are going to have a way to define the dip, right? For me, it's going to be the daily price movement range or the hourly price movement range or even the wave, right? Okay. Alex says, learning to trade what I see, not what I think, is going to happen. Yeah. Alex, I tell you what, that's a lifelong pursuit. It's so easy to get wrapped up into the I thinks and I feels. I even try to stop saying that, but it spills out. It's just a human thing. But Monday was challenging. Tuesday, Wednesday, not so much. But Monday was a very weird day. I wouldn't say you missed anything, Alex. When we have the top 7 names not participating in an index, remember, don't use that exception as a rule. In other words, don't say, oh my gosh, I missed something. Ask yourself, why did I choose not to trade it? And isn't it because if that were to happen 10 times, right, probably 8 out of 10 times, it would have yielded what we'd expect, which was just an unusually choppy, if not bearish day when the top 7 names are moving lower, right? So it's really dangerous to look at an exception to the rule, an exception to the probability, right? When we talk about rules of the market, we're really talking about probabilities, yes? So if I start thinking that the exception to the probability is what's going to happen more often than not, yeah, Alex, I don't think we missed anything. Yeah, seriously. Don't do that to yourself. Most of the time, that's going to map to a challenging day, not to clarity to the upside. Welcome to December, though, right? Welcome to December window dressing, and certainly more clarity from the Federal Reserve that they mean it. They're going to cut rates. All right, SJ asked, there are a number of gaps below on SPYQQQ. Hey, SJ, I'm going to tell you, I know rollover gaps are tempting. I could care less about gaps, and I really recommend most everyone here does too. Please, please, please. Gaps are simply support and resistance. So if we were to head down, the gap close is just a formidable and noticeable and popular support level, but gaps are not setups, right? And there's a big difference between saying that gap up is support versus that gap up is a setup. Gaps do not have to close right away, right? And I think a lot of traders are thinking, hey, what happened? So I don't in any way wake up on rollover day going, oh my gosh, the gap. I actually don't think about it. I'm telling you, SJ, right now, if you never gave gaps another thought other than simply its support and resistance, it'll be a lot better. Yeah. So don't worry about it. I don't know about the percentages, but I'm not worried about the gaps filling because it's on a setup. It's just support. Does that make sense, gang? I got a lot of gap questions. Rag, how do you trade gaps? If it's a day trading morning and we have a gap up, we look for maybe a setup for the gap to close, but the gap closing is not a setup. There's got to be a price level or an indicator reading or something that suggests the likelihood that could be higher. But I really seldom, even intraday, give another thought to gaps. I just don't. All right, Meta. Probably, look, there's a number of symbols that we have not been in any way interested in. Because in a world of uptrends, Google, Meta, and actually Tesla are not uptrends. If I have a bunch of stocks like Apple, Microsoft, Amazon, AMD, Intel that are moving higher, right? I'm going to make sure I have the discipline to say, am I going to trade my favorite stock, right? Which is usually where Tesla lands, right? It's favorite stock land. Or look, if you want to trade chop, if there's some advantage to your setups and your indicators looking at chop, by all means, Meta, Google, and Tesla are the perfect candidates for that. But if you're looking for trend continuation, if you're looking for follow through, that ain't where you go, right? So you got to ask yourself, what is it that I need, right? What is it that my strategy or indicator needs. In what environment does it thrive? And if you can identify that, then Meta, Google, Tesla might have use. If not, in my land of I want follow through, I want trends, I want the path of least resistance, it's not even going to ping on the radar, and it's not. So those two, my friend, Meta, Google, and throw in Tesla, and even Nvidia has been a little off. So I won't pay attention there. But AMD and Intel have been far, far better. All right, gang. As always, thanks for being here for Charts and Coffee. I will see you tomorrow, same time, same station. Great stuff. Great questions, gang. Keep them coming. We'll do it all again tomorrow. Be good to each other, gang. My Sector Secrets Mastery folks, my futures folks, I'll see you in just a moment.